When a taxpayer owes a large sum of money to the IRS, there are options that may be available. The IRS Offer and Compromise is a popular program that many have heard about that lets taxpayers settle tax debt for pennies on the dollar. Hi, I'm Gary, and welcome to TaxBulldog for the best thoughts and ideas for trimming your tax debt. These videos are to help you to help yourself to avoid costly professional fees. If your situation has a level of complexity, then you may want to consult a tax professional. These videos will at least give you an introduction of what to expect and to know when someone is just misleading you. Now before I start, I have to make a few disclosures that are important. In these videos, I will make references to links and resources on the web. Often I will display them on the screen and I'll put them in the description below. If the link is lengthy, I will just list it in the description below. If you feel you need professional help, see my video on selecting a tax professional to represent you at this link. In these videos, I'm not able to cover all angles, aspects, and specifics. This is general in nature and will hopefully guide you to finding more information as you need it. I will cover information on states where I can, but there are 50 states, and each having their own unique tax laws. While I have worked with many states in my many years in this profession, they do change often. It is a good idea to read the description of these videos, as they can contain information and references not in this video, especially if it was added later as an update to the video. So check back often. I may have something new for you. Now, the information I provide in this video is not legal advice and should not be relied upon as such. All or portions of this video are copyrighted and all rights are reserved. So, to get down to this subject. In this video, I'm going to talk about an overview of the IRS Offer and Compromise program. So I'll cover 1 is what is an offer and compromise. 2, how is an offer amount determined? And 3, how do you submit your offer? I would like to recommend that you obtain our book /IRS Back Taxes at this link. This will enable you to follow along in this video series. In this video series, I'm going to follow along with the chapters of our book. There are a few options to consider before entering into the offer and compromise process. These may save you some time and money. The first question should be, is the tax debt valid? See my video on this at this link. There may be other forms of relief, such as innocent spouse or the collection statutes that may soon be expiring. You may want to consider those options. Before getting into the offer and compromise process, consider some simpler options for resolving the tax debt. An installment agreement. The IRS has some simple and easy agreements when you owe less than $50,000. See my video on streamlined installment agreements at this link. Also, there are abatements. This is where the IRS will forgive penalty and associated interest if the taxpayer has what's called reasonable cause. Now, that can be a subjective term, but the IRS defines it pretty clearly. See my video on abatements at this link. Now, for bankruptcy relief, you may be able to discharge personal income taxes in bankruptcy. See an article I wrote at this link. I'll be making a video on this topic in the near future. Be sure to subscribe so you won't miss out on that. And check back here for updates and descriptions below. See our book /IRS Back Taxes for information on these options. Now, the first topic I posed before is what is an offer and compromise? An offer and compromise, hereinafter referred to as an OIC, is a negotiated settlement between the federal government and the taxpayer. The IRS is charged with administering the program. Now, the government uses the term negotiated settlement. In this procedure of an OIC, the word negotiated can be a subjective term. Mostly, the government sets the rules for what will or will not work. They have some standards that they don't deviate from. However, there are some parts that may be negotiated. That is what I will cover in this series on OICs. I will also cover the government standards, what they are, and how you may sometimes work around them. Now, the offer and compromise is designed to give relief to taxpayers who are in poor economic circumstances, and the outlook for the foreseeable future is not looking good. An example may be a taxpayer who has a tax debt due to mistakes in business or by the adverse effects from others. And now the taxpayer is destitute, has little or no income or resources, and is in their senior years or in bad health. Basically, the taxpayer is in a bad financial situation with little hope of improvement in the foreseeable future. There can be many other circumstances too that qualify people for an OIC. An OIC is not just something where it's like, let's make a deal. The taxpayer has to show that this is the government's best way of resolving the tax debt in both the government's and the taxpayer's best interests. Now, an overview of an OIC. The first step in any negotiations with the IRS is compliance. What this means is that all tax returns that apply to you or any business or any other kind of entity in which you're involved in are filed up to date. If not, that must be done before starting any negotiations with the IRS. Now, that doesn't mean the returns have to be paid, they just have to be filed. Now, the second topic I listed in the beginning is, how is an offer amount determined? Basically, in simple terms, the IRS looks at your assets, resources, and ability to pay on a periodic basis. Then they calculate from that what is a reasonable amount to offer. Keep in mind that this is a dynamic process. It can and does change without notice. What I publish here is based on the current known laws, policies, and procedures at the time. Check back here or consult a professional for any changes. Now, looking at your assets, there are two types of assets, tangible and intangible. Tangible assets is property you own. Tangible means it is a physical property, such as land, buildings, vehicles, furniture, inventory, equipment, tools, stocks, bonds, and cash, and etc. It has a fixed existence. Now, intangible assets are assets that are not physical in nature. Intellectual property, including items such as patents, trademarks, copyrights, goodwill, and brand recognition. Now, your assets are each evaluated for what its market value is. This is one of those negotiable areas. Once a value is determined, they subtract any secured interest against the property. Now, a secured interest is when the asset is secured by a mortgage or security in the title of the asset. For a business, this may include UCC-1 filings. A UCC-1 is a filing of secured interest in business property by a lender, much like a lien. When the market value is reduced by any secured interest, then you have a net value of the asset. Now, for negative values cannot offset positive values. If one asset has a positive net value and another has a negative net value, the property with a positive value cannot be reduced by the property with a negative value unless the security of the negatively valued one is also secured by the other property by the lender. That's a little confusing. This works against the common expectations of one's net worth. However, in this case, the IRS only considers properties individually and by their individual net values. Now, the total of your positive asset net values are your total net assets. As I mentioned, negative asset values do not reduce this amount. Now, for resources, your resources may be an ability to borrow against equity in your assets. Typically, lenders won't lend you more than 100% of the equity, but maybe close to it. The IRS may ask you to attempt to borrow against equity and pay that amount to the IRS. Thereafter, the IRS will just consider the remaining equity value in that asset. This is usually not a good deal for the taxpayer because theoretically, the IRS may gain more value than is really there. Alternatively, borrowing the full value from a private party as a secured loan will cash that out and avoid that. Another option is to sell the asset, then the IRS only gets what the real value is. Now, for ability to pay, the IRS will closely scrutinize your income and allowable living expenses. They will apply the allowable living standards, which are the same as used in the bankruptcies. The intent of these standards is to ensure that the taxpayer is not living a luxurious or lavish lifestyle that precludes the taxpayer from paying taxes more so than any other taxpayers would. Now, this may require a change in living standards of the taxpayer. However, there may be some options for the taxpayer to avoid any changes that could create a hardship. Now, as far as how much to offer, well, that's going to be the sums of the net assets, resources, and the ability to pay. Example, and I'll put this up on the screen. You've got a taxpayer owes $100,000 in taxes. Net assets are $5,000, and the resources are equity that exceeds lending value, $1,000. And his ability to pay monthly is $100 per month. Now, in a cash offer, we typically take that monthly amount, multiply it by 12, to get an amount for using in the offer. So that would equal $1,200. So we have a total offer of $7,200. Now, there are other factors to consider that varies case by case that may impact this calculation. Factors may include Can the tax debt otherwise be paid off before the collection statutes expire? That could preclude what otherwise looks like a viable offer. The next part is how to submit your offer. You use the Form 656 OIC package. You can find the offer package and fillable forms at this link and where to send them in. I'm going to put up a screen here what the site looks like, and I'll give you a brief overview. You can review this at your convenience later at this website. I suggest you get familiar with this by simply reviewing it to make it easier for you. Okay, I'm in my browser here and I've navigated to this web address to get here to see the Offer and Compromise Form 656 booklet. And this is several pages long and includes a lot of the forms, fillable forms, that you can complete as you go. Then we get into a couple of pages here that are informational and give you some instructions on what you need to do and how to apply and for paying your offer. And we get down to the forms here. This is the Form 433A OIC. It's a collection information statement for wage earners and self-employed individuals. This, obtains a lot of information from you, and I'll get into this in more detail in future videos. Right now, I'm just doing a quick overview. Basically, first page here is your demographics, your name, phone number, and address, and then about your personal information and assets, income information, and living expenses, and for self-employed, some of their information to determine what their income is. Then we get to this one, Form 433B OIC. It's a collection information statement for businesses, and businesses can do offers too, although they are more limited. And same here, it's basic demographics, then an asset information, income and expense, and then we get to this Form 656, which is the Offer and Compromise form itself, and beginning here is basic demographics, and then also identifying the tax types and tax periods that you're seeking to compromise. Further pages are more information and calculating what to offer. Also explains offer terms and some of the caveats of doing an offer and compromise. Then this final signature page here. Then an application checklist. So this lets you check off that you make sure you got everything completed and enclosed with the offer package. Then down here it shows where to mail your offer package to based on the states that you reside in. And that's it for this package. Again, this was a brief overview of the OIC package. I will explain more in detail in future videos. I suggest that you get familiar with this by simply reviewing it to make it easier for you. So in summary, an OIC is a settlement between the government and the taxpayer. Some states have an OIC program also, and they vary widely state by state. The IRS looks at assets and resources to see what you have. The IRS looks at your monthly ability to pay in the near term and possibly into the future. The OIC is typically a cash offer deal, no extended payment terms. Although in some cases you can get up to 2 years, but that does change the amount of the offer. On future videos on OICs, I will cover these topics: preparing the collection information statement, a financial statement, evaluating your assets, evaluating your payment ability, evaluating what to offer, and completing the Form 656 OIC, and then how to submit your offer. Now here are some resources, and I'll put these in the description below. TaxBulldog.com. This is my website with many articles, documents, forms, and other information in regards to dealing with tax collection and audit issues. And I try to demystify things. /IRS Back Taxes book. This is a book that I wrote with my co-author, and it's available online at this link. Now, having this book will help you follow along in this video series on OICs. TaxBulldog here on YouTube for helpful tax videos. The IRS on YouTube. This is a treasure trove of helpful videos for taxpayers. This is very good information. Also, I'll provide references to the Federal Internal Revenue Code, U.S. Treasury regulations, Internal Revenue Manual, and any policies, procedures that may apply. These are not all inclusive, as there may be circumstances whereas other laws, regulations, policies, and procedures and court decisions may apply. So in closing, thank you for watching this video. If you liked it and you got some useful information and ideas from it, please give me a like and share it with your family, friends, and colleagues. This is all I do, and I do it well. Please subscribe to see my future videos as I produce them, so you can be aware of topics that may be timely and important for you at that time. Be sure to hit that bell icon so you won't miss out on any new information. Please leave your comments below. I can answer general questions here, but for specifics, please contact me at TaxBulldog.com. Also, from time to time, I will update the descriptions of my videos as I add other relative videos and information as an update. Check back often if you need more information. I may have something new for you. After a period of time, some of the tax law, regulations, processes, forms, and procedures can change. I will post updates on my website at TaxBulldog.com and in videos here on YouTube. I will also post updates in the descriptions of previously posted videos. After a period of time, some of the links herein may expire as old content is changed and removed from the web by others. Thank you.